Okay, Ziggy, we're talking about two major things today. No little bullshit about specific stock picks because we're still digesting what happened. We're not going to give any, because I'm not going to give any specific advice. I'm not allocating any additional capital to crypto right now. Just so you're clear. But like, I'm waiting because the rebounds is very aggressive. The rebounds,
Okay.
like, it's basically, they
Look at
just
that
wiped
shit.
the fucking people
Jesus
out. They just
Christ.
killed about a bunch of traders and they bringing it back up. So like, I don't think that's cool. Like, everything is rebounding. You see, like crazy.
Yeah, I seen
Just
that.
wiped a bunch of
Holy
people
shit.
out.
All right, let's get it going. Let's record.
Well,
Recording?
we're live. We're live.
What's up, guys? Welcome to the Ark Quant Crypto podcast with our host. What's your name?
Michael Urenson.
And Ziggy. As you guys know, we're going to walk through a bunch of crazy stuff that just happened. Insane shit happened. I know you guys saw that huge dip in all the crypto markets. We don't know if it was Bitcoin. We don't know if it, if it was just one thing. We believe it was the what was it? The exchanges. So we're gonna dive into that so we can understand what's going on, what happened, and how we should be looking at things so we can move forward.
Perfect.
So what happened? Quick recap.
Friday was a bloodbath, as everyone knows by now. What is unknown is what actually caused that huge extreme correction in crypto. The geopolitical trade shock, the Trump's China news, was announced in the morning, early in the morning, I believe around like 10:30 or something, and it caused some correction in the market. Uh, Crypto usually reacts pretty volatile after market closing.
Make this full screen. Make the presentation full screen. Hit the present button. There you go.
Don't change the presentation yet, Pedro. Let us talk a bit.
Yeah. So okay.
So basically, we were expecting some correction, some
Tariffs in
more
China.
volatile, some more volatile correction in crypto after the market closing to basically trade and play that China news out. But the correction that happened after the market closed, I believe around like 6 o'clock at night, basically it started. So about an hour and a half after the markets closed, it was way more volatile. It was way more fierce. It's very hard. Like, I'm really like not a big fan of any like conspiracy or any of that BS type of conversations, but it could statistically. I am a quant trader, and statistically wise, price action wise, order book wise, and crypto is pretty transparent. You could monitor the price action in pretty transparent way. It might take some time to accumulate all the data. It might take some time to.
Well, what's your thesis then? You're not a conspiracy guy,
I'm
so
not.
what's the
I don't
thesis?
know. I don't know what
What do you
happened.
think, based on what you're able to look at and analyze?
I mean, there is some information. There is some analysts talking about some type of glitch that took place. I am more believer in glitches than in than in manipulation. When it was like I would prefer to believe that it was a computer glitch,
Well, I know you
a
prefer to,
software
but based
glitch.
on the data and what you're able to look
I mean,
at,
it could have been it's hard to say at that point. Like, I don't have enough data to say that it wasn't a computer glitch. It could have
yeah,
been a
because if it was
computer
market
glitch.
manipulation, it's like, holy shit, it ain't
Market
so decentralized as we thought it was, right?
market and manipulation is just, I don't understand the long term
Or
beneficiaries.
maybe they needed some liquidity and they were just like, bro, let's wipe these retail guys out and let's bring it
But
back.
that's very short term logic
These
for
guys are
very
much smarter
big
than that.
players
Yeah.
with visionaries who,
Yeah.
like
So maybe it
Binance,
was a glitch.
Bybit. The biggest failure was on the centralized side, and it was driven by the biggest players like Binance, Bybit, like very very big centralized platform
Say it was a glitch.
were
What does that
hit
mean?
the most. I mean, they talking about some type of the software glitch where they're using the same software to fill up the books, and that at some point there was basically the software wasn't given the right prices for the instruments, and that's why the order books weren't executed properly, which resulted in a short-term freeze, which combined with all the emotions and everything, when it reopened, actually pushed the price down to those levels. But that could be investigated. That should be investigated. I'm not sure. It's beyond my level of knowledge and education to suggest how to investigate it. But I'm sure with the crypto transparency, there should be enough data to investigate it. The problem might be the offshore exchanges. The most exchanges that, like Coinbase, was not like experiencing that severe problem. It also did. It also became part of that centralized collapse, but it only lasted for 45 minutes, and then it rebounds. And from what I'm hearing, from what I heard from several sources, there were announcements that the crypto exchanges actually considering to compensate at least partially for some of those losses,
Analysis.
which were caused by the cascade liquidations. We basically experienced cascade liquidations where no one expected that drop, because the price usually
And then a
doesn't
bunch of people.
drop that fast, because for price to drop that fast and to come back that fast, there must have been a bunch of buyers who jumped in at that
At
certain
that time,
level at 6:45 at night on Friday. I
they were
wasn't in
like, great
front of your
opportunity to buy
computer.
in. Yeah.
You weren't in front of your
No.
computer. It wasn't programmed in. It was just like there was no price action that could have created that move late at night.
Yeah.
If that was that many
But what
sellers,
about the China tariff announcement?
but it was already played out. Like in the modern world, those news play out very fast. Usually in a matter of couple hours. The stock market played it all out by the time it closed at 4:30. The crypto market, usually driven by whales and by speculation and by some type of natural manipulation, could sometimes deep further in after the market closed, after the major liquidity institutional players basically went home and went to bed. But the deep should not be uh, that uh, that low. Like
Yeah.
the two things that concern me the most is how low it's dipped first, and how fast it rebounds. Who bought? Who came in? Who bought? Who bought that dip? I didn't buy it. You didn't
And
buy
so
it.
that's
Who
why you
bought that
think.
dip? The whales got burned. The whales just lost billions of dollars. Like they weren't buying it in. They can't
Yeah.
raise liquidity that fast. It takes weekend or couple weeks to raise additional liquidity, go to your investors and basically get more money.
Right.
But who bought that deep that fast? There was no buyers, so that must be a glitch. My understanding, that must be some type of glitch which might have been combined with a manipulation. But in any case, as sad as it is, I believe, unfortunately, I believe it's, as we discussed earlier with you, it's going to have a long term effect, because it does destroy the argument. It does destroy the argument of the whole technology, the
Of
futuristic approach, the
the decentralization,
decentralization, exactly.
that that's the future, and that it's unbreakable and all that shit. Well, I mean, I guess we just saw that it's very breakable. Whether it was a glitch or it was a manipulation, either way, the proof is in the pudding, right?
The problem is that in crypto we mostly buy the technology, we buy the future, we buy the belief that the technology is great, that it's futuristic, and that it's protected from the
It's an
manipulation
advancement, yeah.
or breach of
Breach of
security,
security, yeah.
breach of technology, like the one that experienced. So both
So
ways
I'm
is
waiting to
bad
hear on
for
our friends
crypto.
from
The
Nearest Protocol and see what they've got to say about this. Oh, waiting to hear.
It will be good to meet with them because they are in security business, and it will be good to meet with them, and hopefully we would be able to bring some additional alpha and some additional thoughts about it for you guys, because I'm very interested to see what type of protocols and what type of players. I've been like already researching it a bit. Perhaps by the end of the week, we would come up with some actual suggestions on what type of protocols are good plays and good buys, which could potentially protect from the situation like that repeating. It basically have to be some type of automated order books, but again, I mean, it's high tech technology. I want to see how
That's like, yeah.
that's implemented.
David would know. David would be able to probably speak on this.
David for sure, because they are in security business and what they're doing
Yeah.
is pretty advanced.
Very, very.
So let's get their opinion and hope we will be able to
Well,
get them tuned in either later today or we'll meet with them and have a drink and perhaps get some thoughts which we could share
yeah, I
later.
need to see. Yeah.
Okay, so let's jump into the deeper analysis. Today, I want to concentrate on two major things. First of all, I want to concentrate on general because there is always more than one thing influencing the market. So I basically took some step back over the weekend, and we do need to revise our vision and portfolio and everything, taking into account what happened to. Crypto, taking into account what we experienced on Friday, we must revise what we're doing, how we're allocating it, and we will come back with better vision because it might be a time for diversification. It might be like we're going to look at two things basically. We're going to look at the macro picture just to understand what the macro level is because crypto is heavily dependent on macro and the
And then the
crypto
micro
is
level.
very dependent of the general investment and risk off risk on sentiment. So we're going to look at that level of things and then we're also going to look at the crypto specific macro factors to understand where we are in the crypto cycle and whether what we experienced on Friday could mean the break and the end of cycle eventually because the events like that might end the cycle. We're
Yeah.
all talking about
Well, I wanna, you know, ask you about this because I did notice something. I was scrolling through and looking through, what people were saying about this stuff, and I found someone talking about, how this happened. I mean, there was a huge dip. Now I don't know if it was as fast, but there was a huge dip right before, there was a big Bitcoin surge, and it's happened a couple of times in the past. So, is it possible that this might have, you know, indicated the the last and final dip right before the big bull run? Because that's kind of how it has played out sometimes, at least half the time, in these big bull runs.
you're absolutely right that it's basically a flip of the coin that it's basically no you're right that no the problem is that there is so many indicators that it's easy to overfit them to the specific case that you want to fit them. I could
Yeah.
find the arguments for
Oh,
both.
for both.
The
Yeah.
problem there will be no public announcement, no nor for the bull run to start, neither for the bull run to end, and the correction and the bear
Yeah.
market start
Yeah.
eventually.
It's true.
So it's
There is a
basically
massive adoption. I think we need to look at the analytics and the data, but also with the world. It seems like there is a really massive, strong
that's quantifiable,
adoption.
and that's one of the criteria that we actually looked at
Okay. Okay.
over the weekend. So we'll definitely present our stand
Okay.
on the mass adoption as well,
So let's get
because
into it.
the idea is basically that we're quants, and all that we're left to do after the moves like what we experienced on Friday, especially in crypto, is number one, deleverage,
Mm.
because if you deleveraged, you don't give a fuck that the price went down to 100 or even 90 or even 80 for a matter of minutes because you're not
You're
going
not
to
gonna
get
margin out.
liquidated. Yeah.
Yeah.
Number two, go decentralized. I'm not that big of like again like for me even crypto is quite new, but like I do appreciate decentralization. I understand decentralization and everything, but I use centralized exchanges. I use margin. I use safe level of margin, but even with a safe level of margin on Friday, you could have been
You
still
could have been wiped
liquidated. I
out.
don't use 5, 10 margin, but I use 2, 3. But even 2, 3 could have been liquidated on Friday because it's just like anomalic moves when the coins which are worth $10 billion in the next couple of minutes are worth less than a billion.
Hmm.
I mean, you cannot build a stable foundation based on that. So, that's why we basically have to look at the bigger quant picture, on the bigger quantitative picture, to understand what are the macro factors. The de-risk for sure, even if it's not the end of the bull market, we are 95% in the last leg of it. What we experienced, what you're saying basically, it might have been a last clear the leverage, clear everything, and that might be the last,
Bull run
yeah, the
before the
last
end of it all,
reason, the last basically
before
conditions
it
created.
stabilizes or it
Even
just
though
goes back down.
I'm not sure who will be buying into it, because you need people not burn down. You don't in order for bull run to run, you need buyers to support it. And when you
I mean,
just
there's still a lot of money out
whipped
there,
out $10 billion, but you whipped out $10 billion out of it.
but I
ten
still
billion
feel
dollars.
that. Well, how much is in there? You think?
I mean, it's a big market, but 10 billion is a big
I mean, it's
wipeout. Some
what do you think,
people
about
will
10%
also.
of the market?
No, less than that. It's
So,
3 or 4 trillion right now. Depends how you count. It's
shit.
$4 trillion market.
Oh, you mean the entire
The
market, not just
entire
the?
crypto market.
Oh, just crypto it's that big now?
Yes, it's very big.
Wow, I didn't know that.
Uh, Look here, 3.9
There's a
trillion
lot of
after
money.
wipeout. It was 4.3 trillion. In order to look at it, you look at the total. For everyone, guys, Ziggy raised a good question up. So in order to look at the total market cap, you could go in trading
They
view.
wiped out.
Yeah, and you
Wow.
could look at the total, and you see like the total was 4.3 at the peak,
They washed
and
out
then it
10
went to
billion.
3.3. They wiped out $1 trillion.
Yeah, this is like a
Not
trillion,
yeah,
not 10 billion.
but that's the price wiped out. No, it's not all leveraged. It's not all leveraged. A lot of people just experience the
Holy
decrease
shit, that's
and
a
then
lot of fucking
increased
money.
back. But imagine if you were liquidated here right
Well, it
before
wasn't
the
a
fucking
full trillion they wiped out.
trillion right there from 4.3. You see, look,
4.3
4.3 at the top,
to 3.9. To 3.9, yeah.
and at the bottom here it was 3.2. It took a full trillion, but it was momentarily. It's not like anyone. But what if it was if stopped here? What if it wasn't a glitch? If it didn't
Then it
go
would be
back up,
fucking
it
like
would
that.
have been wiped out $1 trillion.
Oh my god.
Trillion.
That would have been
I
insane.
didn't even look. I think it might have been the biggest one ever. I don't think the
That's
stock market ever
insane,
experienced
bro. I ain't never seen no shit
trillion
like that
dollars.
in
Like
my life.
proportionally
Look at that
wise, it's
shit.
25% of the whole market. Like just wiped out for
Oh,
45
and it
minutes
goes where?
and then
That's my thing.
rebuilds
And it
back.
goes where? So I understand why you say it could be a glitch because,
Nowhere, just wiped out,
like, out of nowhere.
deleted,
What is that? Delete. Delete.
erased by mistake.
Like, are you fucking kidding? So what is?
And that's total. So you could look at total market. Total 2 is excluding Bitcoin, and total 3 is excluding Bitcoin and Ethereum. So total 3
Well, I
and
still
total
think there's a
3 was
lot of money in the world, and I think that people, are looking at it, and they're just
almost
looking at it
halved.
because, right? There's like a lot. Well, I appreciate you too because you're definitely one of those chart guys. Data, data, data. You have to be that way. But there are also people that are playing these games that are thinking that it's like the people game.
Switch.
Like what's happening in the world and like what's going on with the people, and that's how they see things are manipulating the market. And so you look at it and you're like, okay, if everybody's, pretty much not everybody, but a lot of people are really really powerful people, and there's like a very, a very small amount of the entire population, but that small amount of the entire population is so strong on crypto. And so if something like that happens, what are they going to do? They're going to look to buy the dip. Even the wealthy folks looking to buy the dip, continue going because it's a long-term play with the laws that have been passed, the people that are in power that are heading into huge financial power, like the Trump family, etc. Huge financial power where they're headed with it. And what are they backed? They're backing crypto. And if that's a new financial superpower in the world, so it's kind of almost safe to say crypto is still going to be somewhere in the future, even though we experienced a huge dip real quick, maybe it could still be on its way up. I don't
I
know. I'm
mean,
speculating.
you are definitely right in a way that crypto should be strong enough to survive
This
this type of
situation.
situations and this type of tests. This type of tests should make crypto stronger eventually. And if it's something what we
That makes
believe
sense.
in, if we are right and we made our bets right, it has to become stronger. It cannot be manipulated. It have to figure out the ways to hedge against it. All the financial instruments are great on the run up, but in the stress test
The
situations
stress
like with
test,
the
absolutely.
experience on Friday for crypto,
So some
is
real
where there is
elasticity there.
a real value for the investors are showing.
That's right.
You're right about making the accent about retail, but we talked with you about that a lot. That, and since you also talk a lot to high net worth individuals, you know that this is part of the
It's
formula.
a
That
part of
the
the game.
institutional investment, that's why the high net worth individuals are in, because institutions are playing, because
That's right.
institutional adoption.
That's
It's
right.
not more about the digest players who fucking go
That's
with
right.
10x,
That's right. That's
young
right.
kids,
The
Ferraris,
retail.
Porsches. Yeah, it's
Yeah.
not about so retail driven anymore.
It's now
Uh,
institutional. It's being
and
institutionalized.
institution is not going to adopt manipulation. Institution is
That is very
high
true.
net worth, and institutions stand against manipulation. And why crypto was gaining easy support? Because crypto is supposed to be against manipulation and for the decentralization.
Yeah, but that little move right there showcased that there's a chink in the armor.
In the centralized exchanges, we all have to revalue. We all have to come back to the crypto roots. It's all about decentralization at the end of the day. If we're unable to decentralize it and figure it out how to make it safe and how to automate those order books in decentralized way, let's talk about that with Bob today also when we talk with him, because he might have an interesting edge since he played the market, and since he have a good feeling how the order books are formed and how the psychology of order books. Perhaps he could provide some view and some suggestions in terms of how the order books could be automated under such conditions. Let's go to the
Good.
global picture now. Let's go really fast. There is a full blowing article published on Substacks. If you guys interested, you could read a full article on that. So basically, what we did here, we looked at several risks. Actually, it's like six main risks that we believe are influencing market right now. We assigned the influence level and the positive outcome probability as well as weight. It's a bit quantitative driven, but it's not based on any serious quantitative analysis, analysis, more like sentimental, and generally speaking, based on the previous experience and previous understanding, how much those things could influence the market. We are not yet, we still not putting here the shutdown, the government shutdown, because we believe that it's kind of built in into the monetary policy uncertainty in some way, because the major influence that we experience in this financial markets from the shutdown, that we didn't get our data, we didn't get our macroeconomic data, we didn't get, I believe they missed the GDP numbers or unemployment data. So one of the indicators was missed and not provided last week due to the shutdown. And Feds are not going to have all that data before making the decision. The good thing about it that based on our analysis of six major narratives and six major risk factors, we took geopolitical trade shock with China, which was basically majorly playing on Friday, and we believe though, although it's the only really that like we assign the most weight to it because it had the highest influence, and other than that the market was growing for weeks. So without that news we probably would have not seen what we saw. But it played out. But and for now, at least for like when we prepared it, even though on Sunday Trump already kind of like tried to de-escalate the tensions.
Yeah, I
Let's
saw
put
that.
it way. So I don't know. I mean, with the even though for now the positive outcome seems to be low, I think it might be a short term, and it's mostly based on the fact that it usually takes Trump around 3 to 4 weeks to play out those negotiations, and we already kind of have those statistics in place. So usually 3 4 weeks, and then he's going to be in China in November, and I'm sure they will hug and kiss, and he would do whatever he done today in Gaza, and he's going to free all the hostages, and the crypto bull run would prosper again together with all the stock market, at least till the end of the
Yay,
year.
Trump for that.
So I mean, he did a great job. I don't know. You read the news today?
No, I
He
saw it.
he
I
got all
saw
the
him
hostages,
posting on
all the
Twitter.
Israeli
Oh,
hostages out.
really?
Yeah,
Really?
everyone. Yeah, he got it all out.
Wow.
Everyone was calling me today from Israel. Everyone is
People
like,
hate him, but it's like, bro, like, what are
no,
you
but
gonna do?
sometimes
Like,
he
what are
goes
you
and
gonna
does
do?
that crazy stuff like out
They're
of
not gonna be
nowhere.
like, yeah, he
I
did
mean,
that. They're
two
gonna be like, fuck,
years,
like,
two
it's crazy.
years they've been like working around it. 2 years or two
He
of,
went and got him. Good
yeah, he just
man.
went and got it
Good for
all resolved.
him. Good
And
for
now he's
America.
flying to somewhere else, to Gaza or somewhere to Palestine. I don't even know where he's flying, but he's now on the way to get the Riviera going.
All my conservative friends are probably like on fire. I'm gonna have to call them. All my what do you call them? What's the other side? I don't dabble in all the politics. All of my um Democrat. What do you call them?
Republican, I don't know.
Liberal.
Liberal,
Yeah,
liberal.
liberal friends are probably just like don't give a shit.
Not happy.
They
They
don't
never,
care
they
either way.
never happy. They never
Yeah.
happy.
I got some though that are like so chill. Some of my liberal friends like they hang out together, conservative and like probably because they're all like rich or like high up in the politics or something. They hang out and they're cool. Some of them just like they just hate each other. I don't know. Anyways,
Okay, so let's go back to the factors. The geopolitical trade hopefully will be resolved within the next month, and as bad as it looks now, and with a positive low outcome, with a positive low probability outlook for the fast resolution, this may change very fast, and we'll just keep monitoring it because that's the only one really with both high influence and low probability of the positive outcome. The rest, I believe, are pretty minor, at least for now. The capital leverage unwind is already fully played out. As bad as it was on Friday, there is no too much leverage left in crypto, so that's a good thing. And whenever leverage, that's what you actually mentioned before, whenever leverage unwinds happen, usually followed by the rallies in the next couple of weeks. So as bad as it was in the as much higher of bad influence it had, um, we already passed that. So like it's I don't think it's influences us in any like material way going forward. Monetary policy uncertainty. That's what I was just mentioning about the fact that we didn't receive some of the reports might actually negatively influence the monetary policy decision. I don't think it would because Feds are smarter than couple data points that they know always come they come wrong anyway because they continuously revise them every month. They could make their decision. They already provided guidance. I don't think they would want to distress the markets even further. I don't think they would have any signs of the improving economic situation either. They don't have either bad nor good news. So I think they'll just move with the original plan. So I think that a bit exaggerated this risk is, even though it's like a popular opinion right now, been there mentioned in several sources by several analysts. I think it's a bit overplayed. That's why we assign some weight to it, around 15%, but not too much weight. Then there is also a lot of talking about valuation and AI concentration risk, and we also put it on the table, but we also put it with low influence and with high probability of resolution. I discussed it with Bob actually, and I trust his opinion on that. His opinion on that is very simple. Those black swans usually come unannounced. So, like, if the people are talking about that, the people usually don't know where the fee nice is. If people are talking about it, that means that the market is already adjusted that risk.
Yeah.
So if that people are talking about AI concentration and AI overvaluation, Bob been through it because Bob was trading for all those dot-com crises. I just graduated from
Wow.
university. A lot of people are comparing AI concentration right now with the dot-com crisis of 2000s,
Of course,
2001.
I that makes
Yeah,
sense.
when I was just graduating, because it was also a high-tech boom. But the problem there,
When
the
people are
actual
talking about it, it's
problem there,
probably too late.
first of all, and second of all, that back then, that was the companies that weren't making any money. We all know that AI makes a
They
shitload
make
of
a shit
money.
ton of money right
You
now.
could argue how profitable they are, but they're extremely
They're killing it right now.
marginable. Like,
Yeah.
they're making a
Extreme.
shitload
That's
of
the whole
money.
point.
Yeah,
Yeah, they got way
all those
less
Nvidia,
overhead.
all those overvalued companies, they're still extremely profitable, and they continually beat the expectations. It's not on paper. And, like, for example, the only one that we don't really know is OpenAI, but because it's not public. But we know it makes a shitload, and on the other hand,
Clearly.
since it's not public, it's not a risk. Like, no one is really invested. Like, the large wide market is not invested in OpenAI.
Yeah.
So I don't buy it. I agree with Bob. I had enough assurance that this risk is not really a risk yet. I mean, the volatility, the general volatility shock that they usually come at those top markets, like where you have a long extended growth. We just had S&P grow by 40%, like what you just were mentioning. From April lows, S&P grew by 40%. Even crypto didn't grow by that much.
Damn.
So I mean, the volatility shocks do happen on overextended market, and even though that we don't think that overall valuation and AI concentration is going to bring to and result into any major corrections, the volatility shocks on the overextended markets might come in, and they might seem more painful than they actually are. I believe the major volatility indicator, there's a great volatility, like the most useful in volatility indicator is VIX. We could make a presentation about how VIX works one day, but it spikes basically. It's a hedge against volatility. So when volatility increases, it spikes. Um, Pedro, you think they could hear us well with all the noise that's coming from that room? Yeah. So it spikes a lot when the volatility increases, and here we could see the uh, incredible spike that we had in the beginning of the year in the first quarter. Then we had like big correction. So here we'd also see it on Friday. It was a 20% spike, but it's already normalizing. We had
Wow.
something like that in July. It's
What the
normalized
fuck
pretty
is that
fast.
giant ass spike? That's when the
That was after the election where he started all the price wars, where he announced all the major price
got
wars,
it.
basically. So volatility is in the play, but we only assign 10% to volatility.
Got it.
And the latest one is a general crypto narrative shift. I mean, since we've been heavily trading crypto, and since this podcast was lately deeply concentrated on crypto, which might change as soon as the bull market ends. We're going to adjust funds fast. As Quants, we
That's
don't get
right.
sticked. We
That's
don't
right.
we don't fall in love with that. We like
That's
money, and we
it.
like making
That's it.
money.
That's what we love. Don't give a shit if it's crypto or fucking stocks or if it's don't give a shit. Currencies.
I don't think we're in a narrative shift mode yet. I think it's a significant pushback for crypto overall, what we experienced on Friday. But crypto is generally used to weathering moves like that. And what we saw over the weekend was I was closely monitoring it, and it was a pretty strong rebound. So I believe based on my analysis and my interpretation of price action over the weekend, the narrative is still in place. The narrative have not shifted. We could still pick up some interesting plays. But we're not going to go that deep into specific allocations yet. We're going to give it a bit more time, see how it plays out, and see how the price action evolves throughout the week to make sure that we place allocations correctly. So that's it for the macro analysis. I think that's it. Yeah, I just wanted to show like a couple graphs on the Bitcoin. So here, basically, just to show that like we did experience a huge drop. This is the aggregated open interest, basically. So that's amount of leverage in the system. So the leverage in the system, basically, as massive as it looked, we dropped from 42 billions of leverage to 32 billions of leverage. So we basically erased 10 billions of leverage from the system, but it's basically what it was in July. So I mean, it's and the crypto price and the Bitcoin was 100K there. So I mean, which corresponds with today's 110 level. It was between 100. It was locked in and 100, 110 in 100 to 110 thousand range for quite a bit, and leverage was not a result driving it further out. It's more like what you talked about, institutional adoption and that type of stuff. So, as dramatic as it felt, for the leverage holders, uh, I mean, it's a big drop. I agree, but on the quantitative basis, we experienced the drops like that before.
Yeah.
Just not that fast. They came like I mean, as early as the beginning of the year, we saw the drop like that. So I mean, and we were trading at 80 right, back then.
Yeah.
Now we just went from 120 to 100 for a bit, and back then we were dreaming to be at 100. So
Yeah.
now just uh, when you get to those high level, it's what I mentioned. That's where volatility starts to play in, and that's where leverage unwinds like start to play in more aggressively. So yeah, if you guys interested to looking deeper in that research, check out the Substack publication. We'll post it in the comments to the video, in the comments below to this video. Now let's really jump really fast into the crypto cycle indicators, which are also pretty important, taken into consideration that we need to the taken into consideration how deeply we are into crypto, how all of us are deep into crypto.
Yeah.
The good news is I'm going to be like we're going to prepare like I'm going to like I have a bunch of slides, like 22 different slides. So you guys understand that analysis were very deep. I haven't prepared an article about that. I haven't prepared a detailed publication because it's easier for that type of material to digest it. It's easier to just write an article than just scrolling through all those graphs and through all those slides. But the conclusion is very simple. Like we basically look at four different group of indicators. Total, I believe, around like um, did I put it somewhere in the notes? No, I didn't put it in the notes. But it's a bunch of indicators. Some of them include 30 indicators already. So it's probably in total like around 50 indicators because one of them is 30, one of them includes 9 indicators, and probably another 10. So probably like around 50 indicators in total that we'll look at. And none of them indicate that we reach the cycle top. Um, from macro liquidity indicators like global supply, treasury debt maturity, interest rate cycle, rate card forecast, different GDP and employment statistics. None of them indicate, all of them basically indicate positive outlook. All of them indicate continuous money easing in. All of them indicate that, and usually when the money easing in comes, um, the risky assets, including crypto, they also grow. Um, so on the macro and liquidity indicators, perfect basically. 100% score. None of them indicate uh, any signs of ending cycle.
Wow.
And then we have the on-chain and market structure indicators, like four main ones of them, five main ones of them, like Bitcoin halving cycle, exchange reserves, whale accumulation versus distribution, Bitcoin dominance, altcoin market location. Again, except for halving, which is about to be ended, like about like somewhere like in the end inside part of it. So like it should be ended by again December. So the only one indicating potential short term end, not that we reached it, not that we ended yet, but potential to end, is actually the 4 year cycle. The
Mm.
rest of them again completely in green, completely positive outlook, no problems ahead. Not highlighting any problems, any obstacles ahead, just further growth. And then what you talked about, there is some sentiment indicators which are important uh, to highlight, like especially this one, the retail activity metrics like YouTube views, Google search trends, Coinbase app download rankings, like those are proxies for retail money. All of them are very low. There is no retail money. Usually the peaks are highlighted by both institutional money, retail money. On TV all day long, you only hear crypto, crypto, crypto every
Mm.
dinner table everywhere, just crypto,
People are
crypto,
chilling
crypto.
out. There's really
Yeah,
not a
right
lot.
now we don't experience that type of hype. It's hyping because it's a popular theme, but it's not at those extreme hyping metrics when everyone selling the house and leveraging 100x into crypto. So none of them, like CBBI, for example, Crypto Bitcoin Bull Run Index, consists of top 9 cycle indicators. None of them indicate an overbought condition. So none of them indicate in market tops. Bull market peak indicator dashboard, 30 different indicators included. 53.4%, so 50% overall market here hit score. Highest signal 19.5, only one have a critical 19.5 signal. Out of 30, only 6 warnings and one critical signal. So basically 23 signals are still in the normal stage, in the normal phase, and not experiencing any overheat. So, I mean, we looked like as a quants, we have a lot of tools, but at the end of the days, we are not driven by emotions. And if we're not driven by the emotions, we could look at the diversity of indicators. Just if we look at this indicator by itself, which includes 30 individual indicators, and trust me, some of them are pretty serious indicators. They're pretty diversified too. Like we want diversity, we have diversity here. They have a composite CBBI, and we talked that CBBI itself includes 9 indicators already. So that's
Mm.
an average temperature, but it's not hand-picked or influenced temperature. We know some of them are more accurate, some of them are less accurate, but that's why we are providing them all, because can they be wrong? Can they all be wrong? Hell yeah, they can. Did it ever happen before? I don't think so. I know I've never seen like the bull market like that perfectly unalignedly ending, and like the previous data doesn't show it. Like some bull markets half of them peaked out. Some bull markets, third of them peaked out. Some of bull markets, all of them peaked out. But we never had a bull market where zero of them peaked out. None of the macroeconomic data showing us that it's all over and the market just turns around. But there is always a risk of black swan events, so we cannot completely secure from that. But from what we see today, based on the analysis that we did over the weekend, the outlook is actually pretty bright. Um, the outlook is actually pretty bright. We believe that the market conditions are overall remain pretty strong. There is no strong signals for risk off, at least not yet. So we basically we should just continue, like we should be more cautious for sure. Those who still have cash unallocated probably should wait for another week. At least again, what we always do on that show, we only tell you what we do and how we do it. It's not a financial advice. So the way we play it for now, I am completely risk off for now, in the sense that I'm not closed in any existing positions yet, because I don't see any material changes to revise my long-term positions, especially taking into account my not long-term, my mid-term positions, oriented towards the end of the year and towards the previous allocation models that we were using for our crypto investments. So I don't see any substantial data to completely reallocate now, let's say, from altcoins towards which we were allocating lately, back to basically larger coins or completely rotating cash. However, I'm definitely not adding. I'm definitely not adding leverage. I'm keeping some cash on the sides just in case there will be further corrections where I might need to add money to support my already open leverage positions. So that's how I play it.
Fair.
Hopefully it was useful. Hopefully it wasn't too boring. And please give us the feedback. Let us know if you like that type of content or if it's too much
boring. Let us know if you want to see midgets coming in here, breaking it down to explain it to you so we can keep it interesting, or if if it's hot women, or I'm kidding. Yeah, give us feedback. Give us feedback. We can do it all. Whatever you want to see, you're gonna see for the most part. For the most part.
But always combined with quantitative alpha.
That's right. Cheers, guys. Until next time, we're signing off.
Bye.